Testing 1, 2, 3. All right. Welcome to the futures market. Up in the upper left-hand corner, we're looking at the S&P 500. In the upper right-hand corner, we're looking at the mini Dow. In the bottom left-hand corner, we're looking at the Russell. In the bottom right-hand corner, we're looking at the NASDAQ. Did I say the Russell was in the bottom left-hand corner? If I didn't, it is. And that's what we're going to be watching this morning. First thing in the morning, we're going to watch the opening bell from the 3-4 indexes. And then we're going to put on an iron, not an iron. We're going to stay away from the iron condor, iron butterfly today. We're going to go in and just do a standard old butterfly. Once again, we may do a compound butterfly. I want to try something with these butterflies. I said this is going to be butterfly week. So we're going to put a butterfly on every single day. Yesterday, we put on a butterfly. We put on a short. Did we put on a short one? I think we did. We put a long put butterfly. Long put butterfly. That means we anticipate the market falling in price. But it didn't. It shot straight up, so we lost money yesterday. Wasn't very much, but we lost a couple $100 on our butterfly. That's one of the things about the butterfly strategy is that if you lose, it's not very much. If you make money, it's usually pretty good size. So that's why we like the butterfly. And look at that NASDAQ. Now I got these looking. I usually start these off on the 1 minute chart because the 1 minute chart, it's kind of a small time frame. You can go in your minute charts. I mean, you can look at smaller time frames in some platforms, but when we want to go down to something smaller, I look at range bar charts instead of like a 60-second chart or something, which gets a little crazy. So I like range bar charts, and then I like Heikin-Ashi. So we're looking at range bar Heikin-Ashi charts. So a Heikin-Ashi bar is a Japanese candlestick style chart that has a mathematical model that smooths the components. And then a range bar is a bar that has no time involved. So each price bar represents just a certain amount of movement within the market. So each price bar could last 1 minute, 2 seconds, 20 seconds, 2 hours. It just depends on how far the market moves. Now we got these set pretty tight, pretty small down here on range bar 6. Range bar 6 works really good after the morning bell is over. So we're watching the morning bell right now, and we're looking at range bar 6. So why are we looking at range bar 6 today for the morning bell? Well, because we just wanted to do it. That's it, because I like range bars, but sometimes we have to turn them up. This is range bar 6. Sometimes we have to turn them up to range bar 12 this time of the day. So let's do that. Let's come down here, and we're just going to put this on range bar 12 instead of range bar 6. Range bar 6 works really good when the market's a little bit quieter, but when the market's a little bit more active, we need to turn these babies up so they're not quite so crazy. See, we can go up to range bar. I get range bar 25 set in here as well. If we need to, we can go up to range bar 25. Sometimes that NASDAQ needs to go up to range bar 25. But we'll slow them down here just a little bit. It slows the market down a little bit. Takes bigger risks, but that's okay. The market slows down just a little bit. We're going to come in here, and we're going to change that one to range bar 12 as well. All right, so now we got our range bar 12s in here instead of range bar 6s. We'll change it back to range bar 6 maybe around 9 o'clock. All right, if you guys are still here with me. Probably not. I'll probably be off on my own by 9 o'clock, but we'll see what happens. I was up at 4:30 this morning working. So you can see I'm pretty excited, pretty pumped up, ready to go, waiting for this morning bell to occur. And I think that's it, hasn't it? That's it. That's the morning bell. That's the market taking off. We're going to let this run for just a second, and then we're going to go put our iron, not our iron. Got to stop saying that. We're going to go put our butterfly on. It's not an iron butterfly. Look at that. Look at that Russell taking off first thing here in the morning. We got the Russell taking off like a banshee. There we go. Straight up that trend line. So that was the pre-market session. Right there is where the opening bell. And now it's starting to flush on the open. Now remember, the first thing the reason the market's open and flush all over the place is because they're filling all the nighttime orders. So you got to watch that. Be careful, because it's just kind of not really trending right now. Although it can turn into a trend, and in hindsight, it always like, oh, why don't you just get in right there? You'd be rich, rich, rich. Well, because sometimes it doesn't. Most times it doesn't. It just kind of wobbles and flops back and forth like a dead fish on the bank. So you have to just kind of be real careful here in the beginning. There's a little opportunity to take a short position if you were fast. Right there, you can see this little downtrend, little pullback, little ABC pattern on the continuation of the downtrend. NASDAQ's doing that thing again where it's just going sideways. Here's another one, the Dow. We divorced the Dow. Remember, we we got our hiney handed to us trading the Dow the other day, and so we divorced the Dow, and we were trading the Russell. Not like the Russell was any nicer to us yesterday. Yesterday was a red day. We had a red day yesterday. So let's take a closer look at what's going on here on the Russell. It looks like the one that wants to trade. Let's come down here and actually look at the Russell all by itself. We're going to come in here and we're going to go mini Russell. So we're going to the mini Russell. We got the different time frames. Let's look at all four of them at once. So there we go. There's the Russell. I got those all set up. Let's come in here and change this around a little bit. We got ATR on there. I'm going to turn off the parabolic SAR. Ooh, that ATR is pretty darn tight. Let's come in here. Well, I guess it's about what it needs to be, isn't it? We're going to put it on 7 right now. Look at that thing go. That's a range bar 10. So we're getting a little rebound on here. So there's an ABC pattern on the way down. It's coming back up. Russell on the 15-minute chart just all over the place. This is the 5-minute. I'm going to put the 5-minute. Well, let's leave it just like it is. That looks good to me. Look at that 15-minute chart, though. That Russell is bouncing all over the place. We'll trade the range bar 10, keeping in mind what's going on over here on the 1 minute. This is all of these are the Russell. So you can see it's just flat coming into the open, and now it's starting to bounce around. We got a little red bar in there after this green rally. It's a decision point. Do you think it's going to continue higher, come back up, touch that blue line? Let's see what it's doing. Look at this one bar here on the 5-minute chart. Just wham, wham, wham. Slamming back and forth. Could we get a little something going here? Could we get a little something going here on the range bar? Probably could. Let's come in here. Maybe we can come in and do land secret sauce. We're going to go with the ATR and land secret sauce. We'll just be cautious right here at first. We'll just go quantity 1. I like to do quantity 2 if we can get into a trend, but let's just trade quantity 1 for right now. We're going to come in here and that looks all good. Continue until break even. Put a limit out there. I like to stick that out there. We don't have to have it out that far. Let's go 50 just for fun on here. Exit. Okay. Let's see if it wants to. Let's do this instead. Yeah. Longs and shorts. Let's try that. I don't know. I think I got it set up correctly. Just let the autopilot trade for a minute. Let's just watch it and see how it does. All right. It can execute a little bit better than I can. It's got a little bit more patience than I do. It's a little faster than I am. Sometimes I get talking. I was talking to Bruce yesterday, and Bruce came over to my house. Bruce came over to my house, not in person, but through the computer. And we traded for about an hour, and Bruce is doing really well. He's picking this thing up, doing really well. Pretty proud of Bruce. And he did well. Yesterday, I lost money. Bruce made money. So, hey, there's Matt. Matt saying hello. It's nice to see you, Matt. Let's bring this thing bigger so we can see it. There's Michael Bruce. Michael Bruce saying hello. We got Kirk Schwartz in the house. We got a lot more people watching than what it says saying hi. So if you guys want to throw up your little marquees and say hello, I'll make you famous. I just turned on the autopilot. We're going to let the autopilot go for a little bit, and I'm going to see what's going on before we put on our butterfly. We've been doing compound butterflies this week, and actually Monday we did a compound butterfly, and we had max profit, and we just barely made not even $100. So we got to make some adjustments to our compound butterfly. Yesterday we just put on a normal butterfly, and had we put on the compound butterfly, we'd have probably had a profitable day, but we didn't. We just put on the single butterfly, and so we ended up losing a little bit of money because I thought the market might pull. You know how sometimes the S&P, usually it'll go up in the morning and then kind of flush back down in the afternoon. So I set my butterfly up so that it'd take advantage of that fall in the afternoon, but it didn't ever fall. It just kept going, and it just stayed there. So I didn't get the fall, and so because we didn't get the fall in the afternoon, we lost a little bit of money. The nice thing about the butterfly, look at this. Holy cow, Russell. And I've got the autopilot turned on. This thing's just going to the moon. Did anybody catch that reversal? Anybody catch that ABC pattern? There's Selena. Hello, Selena. It's nice to see you. Matt's giving his kudos to Bruce. Boy, this thing's taking right straight up. Going straight up, straight up. Who gave this market Viagra? Holy cow, look at that thing go. All right. Did you guys hear about Tesla? Tesla had some good things to say. Old Elon Musk got in there and really dazzled everybody with brilliance yesterday. And so Tesla's the big mover in the stock market today. It's up big. We'll need to go over there and take a look at that in just a few minutes. But we got to see if we can't get something going here. Ooh, got some bad FOMO right now. See what I get for turning on the autopilot. Autopilot saying, not yet, man. Not yet. Hold on to your ponies. Are we going to get a rebound? Are we going to get a flush here? See what the autopilot does. Holy cow, this thing's just going straight up. Nothing else is showing up on our... I got down here on the other screen. You guys can't see it. I got my little bubble thing going on over here. See what's going on with the market. Nothing's going up but Tesla. Got a few markets that are going up. There's a little... I don't want to be... There's a one red bar, and it's trying to go green again. I don't really want to go long right there. Feels like I'd be chasing it. But that was a signal for a long position continuation pattern right there. Anybody dare take that one? Ooh, look at that thing go. We're on the backside of the MACD. MACD's turned red. Tough place to be taking a long position. Okay, there we go. We're trying to break lower. Break right there. Autopilot's going to get us in if it'll close below the yellow dots. And I've got those yellow dots pretty darn tight. I got them at a 0.0 or a 0.6. There we go. We're short. And then I got it just trailing on the yellow dots as well. So it's going to go right there on the yellow dots. And if it doesn't just immediately move in our favor, it'll get us back out. And it just got us back out. It'll put us back in, though, if it goes long. If it stays above that yellow dot, it'll go in again. Go to the long side one more time. I got it going both directions. So we're just trading the arrows. Land, why don't you just trade the arrows on the Russell? You'd be rich, rich, rich beyond your wildest dreams if you just trade the arrows on the Russell. That's what everybody tells me every morning. Every morning. Just trade the arrows, Land. Just trade the arrows. Okay. We'll just trade the arrows. Just trading the arrows. Now watch the market die. It just had that big, beautiful run, and now the market's just going to slow death. I think we're just trailing to break even. I don't think we're trailing. That limit up there is at $255. We hit that twice, we'd be done. Just letting the autopilot do it. I'm not doing anything right now. Just trade the arrows, Land. Just trade the arrows. You'd be rich if you just trade the arrows. Well, look at where I turned the autopilot on right here. I didn't turn it on back there. If I turned it on back there, I'd have caught that arrow and rode that thing all the way up to that arrow. But I turned it on halfway through. So it caught all three of these arrows, and now we're down $70. Come on, little market. Push on through there. Be a good boy. You got to talk to it like it's your puppy. Come on, buddy. go back there and drop us out. Nope, it's not going to do it. It's going to go back up. It's going to bounce around up there at the top, isn't it? Nothing you can do. Nothing you can do. If the market doesn't want a trend, you can't make money. Nothing you can do. You could turn off the autopilot. Yeah, but what if it starts to take off and go to the moon? Nobody knows. Come over to my tent. Come over to my carnival tent. Throw darts here. Throw baseballs there. Throw rings over here. It's all a carnival game. It's all a carnival game. Come on, carnival game. Looks like all we're going to get today is a plastic snake. Not even going to give us a plastic snake. We're going to not even get a plastic mouse. You guys go to the circus and you play those games and you play those games and you play those games and you came away with a plastic mouse and you spent like $80. I spent $80 trying to get that plastic mouse. That's a trash right there. We got to get back in. Had to manually intervene on that one. Got stopped out, and now it looks like it wants to go. So I had to manually intervene on the autopilot. And we'll see what happens. See if that was the right thing to do. Third time's a charm. 1, 2, we're on second time though. Can't even get to break even. Can't even get to break even. This market just died. Went up here and just died. Dead. Dead as a doornail. Well, died on the vine. Len, why didn't you turn on the autopilot when you first got in? Well, because I didn't think about it. I was thinking more about compound butterflies. We should probably go over and do that. Well, this is trading on its own. Okay. Think we can even just get our stop move to break even? Come on, you wimpy market. 3 strikes, you're out, Lan. There we go. It's trying. Try a little harder, you stupid market. I can't hit one of those balloons for the life of me. Throwing darts. There it goes. What's your recovery, Lan? 185. 185. It's got to come down to that blue line to just even recover. I got it stopped at break even. I told it not to trail anymore. Stop at break even. I should probably have it trail, huh? It looks like it needs to trail. This thing's not got any strength in it. Trail the ATR. Come on, you rotten little bugger. Drop. Oh, you little piece of poop. All right. Let's see if it wants to go up. Man, ABC patterns. No, we're just trading the arrows. We'll see if it wants to give us something this time. What's our recovery? 130? 135. All you got to do is go up and test those highs, buddy. Just go up and test those highs and give us back our 130. We'll be back to the back to break even, back to zero. Nope. I ain't gonna do that, man. I ain't gonna do that. I gotta whipsaw you one more time. You rotten little bugger. Gotta whipsaw you one more time, Lan. Gonna come down and touch that magic blue line. But I had to do that little ABC thing to take you out just before I do it. Oh, yeah. Great. Nice job. That got us in late. That was a late entry on that arrow. It's amazing that a range bar 10 bar can be a late entry. 195 is our break even. 195. Oh, man, clear down here. Come on, buddy. Come on, buddy. Batter, swing. Batter, swing. Michael Bruce says, volume sucks. The volume sucks today. You are right. What's the economic calendar say? How come it's so sucky today? Refresh. Impact 2. Just got stopped out again. Rotten little market. 6:30 this morning, we had durable goods. Forecast was 2.2. Month over month, 2.6. Consensus was 2.5. Previous was 0.7. So that was 6:30 this morning. New orders for manufacturing durable goods in the United States surged by 2.6 month over month, followed by a downward revision 0.7 growth seen in February and slightly exceeding market expectations of 2.5 increase. So, well, I guess durable goods went up. That was 6:30 this morning. The volume is dead. You are right, Michael Bruce. We are looking at a pretty low volume. Not getting any trend out of this thing at all, are we? 245. Come on, baby. Come on, Russell. Come on, little Russell. You look at that and you're like, wow, I could have traded that. I just get in on every arrow. I'd be rich beyond my wildest dreams. And we did that and we lost money. It's a tough little market right here. Okay, we're at break even. I'm going to turn this on. I'm going to keep trailing on the ATR. And if it'll get up there far enough, we can do a little castling. We can add in another position. But it's showing too much weakness. Too weak. Too weak to add another one. Come on. Come on. Push it up there. Push it up there. Push it up there. There you go. There you go. You think we're going to get one more? One more little push? We add one. All right. We're spending our money buying more. I got to put another stop in here. Come on, scalp and trail land, scalp and trail. Well, I almost got our money back. Not quite. Turn around and come back against us, get us out. Come on. Hit that little blue line. Hit it, hit it, hit it, touch it, take it. Come on, you can do it. Touch it, take it. It's got to break above those previous highs to hit our blue line, though. But we don't really need it to break even. We're at break even now. We could take it off. But then that's not scalp and trail land. That's just recovery. I know, but I like to recover. I still didn't recover. Missed it by 20 bucks. Okay, we got a previous high right here. What's it going to do? What's it going to do? You want to see my settings for the autopilot? Is that what you just said? Here's my autopilot settings. All I did is real simple. Trading quantity 1, strategies, just market order. All I did is come down here. All these things are turned off. I'm long and short. I'm not doing trend. Stop. I put the stop at 55 because we're on the Russell. Stop it. Look, if I'd have held on to it, it had touched our thing. We'd been back to green. So there, and then stop at 11, and then I put a limit. I put trail until break even. So it's just trailing up on the ATR. The ATR is currently set at 0.6. A limit order, I put the limit order out there at 50, which is 250 bucks. That's it. And then I said exit on primary signal. So exit on primary signal probably doesn't matter because we're trailing on the, well, we're not trailing. We're not trailing. We're only trailing to break even. So, but then I've been turning it on manually. So there you go. That's my settings. Go back over to trade. So it's just taking the arrows. And the arrows are pretty aggressive, 0.6. Sometimes I run them at 0.5. Yeah, we got a little recovery. Almost a full recovery. We missed it by 20 bucks. I thought I had it. The spread and the slippage got me. Plus, I got to take into consideration commissions. This is the demo account. There ain't no commissions. Okay, so losing its mojo right there at the peak. Let's see if it flushes a little bit, gets us in on a short position. Just trade the arrows, land. Just trade the arrows. What's it going to do? What's it going to do? Okay, so we're back $55, $60. $60 behind the market. We're in on the arrow. Should have got in earlier, land. Why did you get in so late? I got in on the arrow. Make the arrow tighter if you want to. We can do that. Stopped us out. What if it starts to fall now? You going to get back in? Manually. You have to do it manually. Came back and stopped us out. We had our arrows just a little bit too tight there. Just a little too tight. Come on, rock and roll. Here we go. It's range bar 10. Slowed down enough, we could probably go to range bar 6. Then we'd get in a little earlier. There we go. There we go. There we go. There we go. You're back to break even, land. You going to take it? It's only, well, it's 80 bucks. We should take it. We should have taken the 80 bucks and got back to green. Going to stop us out with the $20 profit. Rotten little piece of crap. Bouncy bounce like a ball. We're going to get an ABC land, ABC. We'll try it one more time on the ABC to the downside, see if it wants to drop again. We're just trying to get back to break even at this point. Can't even make any money. Where's your limit order, land? You don't have one. No, I don't have one. Add OCO. $50 is our break even. We're only in with one contract. Only trading one. It's a good thing we're only trading one, because we were trading 2 or 3 or 5 or 15 contracts, would have really been taking a hit. No, didn't want to do it. What's it going to do now? What's it going to do now? Now we're back down to $100. We need to turn on stochastics. And when it's up in the upper region like that, we should have taken 2 contracts instead of just 1. What's it doing now? What's it doing now? It's coming into one of these little things. Are you going to get in, land? Are you going to get in? Are you going to take a short position on the break of that line? There's no arrow. There's no arrow. So the autopilot's not going to take it. You have to get in manually if you want to take a short position out of the break here, but I don't really want to do that. This time I might try it. Okay, drop this time. Drop a Rooney. Continuation, downtrend. We're in a downtrend. Taking a short position out the break at this bottom. It's not going to break. Come on, break out the bottom. Nobody wants to jump on this with me. Nobody wants to play. Come on, all you sad dogs. Hit the sell, hit the sell, hit the sell, hit the sell market, hit the sell market. Get excited. Look at this perfect setup. Sell market, sell market. Come on. There it goes. It's trying. It's trying. Gonna try and hit that little blue line. Come on, VWAPper. Got lazy up here, didn't it? Sure got lazy all of a sudden. Come on. Come down, touch the blue line. Touch it, touch it, touch it. It's a hot pan. Touch it. It's a do it, do it, do it, do it. Oh, little rotten bugger. Come on, touch the hot plate. Come on, touch the hot pan. Look at that. Came right down to my number and turned around and went back. Gonna stop me out. Scratch trade. You stinky little thing. Michael Bruce, you are right. There is not enough volume in this thing to even play. Come on. Nope. It's not going to do it. Nope. Not going to do it. Watch the tiny chart in the upper left-hand corner. It doesn't matter. We're going to get stopped out at scratch trade. Another commission. See how close that came? Came right down there. Almost touched that VWAP. Now what's it going to do? Now it's going to turn and go to the VWAP. Had to come out and stop everybody out first. It's too choppy. I don't want to get back in. Too choppy. Chop, chop, chop. Chop, chop, chop to the downside. Smooth, smooth, smooth to the upside. So it's chop, chop, chop to the downside. As soon as we get in a long position, it'll go long, long, long to the upside. And should be nice and smooth to the upside. It's choppy, choppy, choppy all the way down. Look at that. Now it's going to come down and touch the blue line. Had to go stop us out first. Oh, yeah. Bugger. You rotten little bugger. We're going to go over and look at the Dow, and the Dow's going to be making these perfect, beautiful, swinging markets, and we're going to be like, what the hell? You guys been watching the Dow and the other charts? What about the NASDAQ? Probably making beautiful, swinging trades. We haven't even put on our option yet. It's already 8 o'clock, down $100. Shake my head. SMH. Well, if you wouldn't have trailed your stop lane, just took it to break even and left it where you started and just let it go down, you'd have been okay. Yeah, it's true. If I wouldn't have kept trying to trail on the yellow dot. Here we go. We're going to go long. We're going to go long. We're going to go long. Is it? Is it going to do it? What's it going to do? Oh, it pulled back. Can't decide what it wants to do. It's lazy. Just wanted to spike once again. The rules for the yellow dot, the rules for the ATR is the market has to close that bar above those yellow dots. If it just spikes them, it doesn't switch sides. We can come in here and go chart, overlay, turn on the parabolic SAR. Ooh, got those big. You get a little bit different view with that one. Look, it's trying to break it again. Trying to go short on the blue. Trying to break below that blue line, isn't it? Trying to break below the VWAP. We're going to give it one more shot here to the long side. Bouncing off that VWAP. Okay. Is this it? Is this it? Is this going to be it? Come on. Come on. Zoom, zoom. Zoom, zoom, zoom. Do you guys have dogs? Do they zoom? Zoom, zoom, zoom. Take my dog out. He gets all excited sometimes. He just starts running in circles like 1,000 miles an hour. We need the market to do that. We need a zoomy, zoom, zoom market. It's 8 o'clock, top of the hour. Come on, guys. Kick it into gear. Can't make money if the market won't trend. Look at stochastics, MACD, both of them dead. There's our break. There it goes. A little late to the party, but we're in. Okay, kick it into gear, buddy. Kick it in, kick it in, kick it in. Buy, buy, buy. Everybody get excited. Hit your markets. Hit your buy market buttons. Everybody hit your buy market buttons. That's what makes the market goes up. People get excited and they start hitting the buy market button. Boom, 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 boom. There's one buyer for every seller. Every time you hit a buy, there's got to be a seller. Well, if there's a buyer for every seller, how does the market go up? How does the market go down? Well, because they're buying at the bid and they're selling at the ask. So that gap between the spread is what makes the market move up and down. And if you got more exuberant buyers, buy, 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 they hit that market button because they're anxious to get in on the bid or on the ask. Get me in, get me in. I'm missing out. I want to go, 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 go. You need them to hit that button. If they hit that button, market will go up. You need continuous people hitting the buy market button. It's the exuberance of the market that makes the market move. That's why markets that have wide spreads are really volatile. Market boom, 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 jumps all over the place because that spread's so wide, it causes the market to bounce all over the place. Okay, Lan, you've recovered your $100. You're up 45. If you closed it out right now, you'd be in the green. Don't do it. Don't do it, Lan. Stay in. Stay in. Don't take the one in the bush. There's two in the tree. Well, this wimpy little market, it's just dropped now. Now we're back below our break even. Come on, guys. This is good. This tastes good. Hit that buy market button. Tastes good. Oh, yeah. Eat it up. Eat it up. Hit the buy market button. Okay, we're running out of time. Can we get our 120? Yeah, we're still $10 down. Doggone it. All right. Turn off the autopilot. We got to go do something else. Stop. Okay. Let's go back over to indexes. Okay, that's the Russell. Dow wasn't doing any better. NASDAQ wasn't doing any better. S&P, dead. Dead on the vine. I guess we picked the best one that we could have. If we'd have picked any others, we'd been even worse off. Okay, let's put on a butterfly on this, and we'll go over to the stock market and play around. All right, so we're going to come in here. This thing's dead. So we're going to come in, not expecting anything, no big moves today. We're going to come in. I want to try something new. Let's try something new. Should we try something new with this one? We're going to come in here, and I'm going to go 0 DTE on the calls, and I'm going to go 1 day on the sold. Yeah, that's what we're going to do. Watch this. We're going to go 1 day. We're going to buy. We're going to do a call or a put. It doesn't really matter because we think the market's going to go up a little bit. Okay, so we're going to buy our call. Buy our call. We're going to buy our call 1 click in the money right there. So there's at the money. We're going to go 1 click in the money. Oh, there's 1 click right there. Okay, so that's 1,175. Now I'm going to come out here. Oh, that's a 1 day. Is that what I wanted to do? Yeah. And then I'm going to go to 0 days, and we're going to see if we can cover the cost by selling some calls up here. Now, that's not going to be enough, is it? If we do 2 of them, it's $970. That means we're going to have to pay $185 for this. But we need it to go more than that. So that would be $740. Let's go up here. 500. That's, yeah, we're going to have to pay $362 for it. That's not what I wanted to do. Oh, yeah, it is. Go one more. Now we're going to pay $4.27. See, this is kind of like a bull call spread with a naked leg. It's a bull call spread with a naked leg. So we're going to pay $4.27. We're going to receive $4.90 to help pay for the $9.37, right? So then, if this market rallies, max profit on that would be $7.50. So we make $7.50. We paid $9.30. We're going to receive $4.90. So if we add $4.90 to $7.50, that's about $1,250, and we're going to pay $9.37. So we could make we're only going to make $230. I don't like that. But that call is going to keep its value better because it's 2 days, or it's today and tomorrow. So that's why it's $937. So we would still have a long call tomorrow. These would expire today. But that's a bull call spread with a naked leg, and we want to cover that leg because, see, we have a margin requirement of $12,000. So we'd have to still buy one more. And we want to buy a 0 to cover that because that's just insurance. We don't have to pay very much for it. Usually equal $72. Go out one more, $60. So now we have to pay $535, and our max profit on this thing would be $750 on the long call. But we're going to receive $480 on our sold put, so that drops that down about half. But then we have to pay $60, so we can only make $750. But then we'd have that in there for all day tomorrow. You want to do that? How much could you lose? What's your max loss? $764. They're going to margin us at our max loss, which is $764. Wow, look at that. Those options that we sold, we could have sold them for $500. Now they're only worth $300. We'd have made $200 in the last, just while I was sitting here capitulating. And look at the value of our long call over here. It's still 962. It hasn't changed. That's because it's got 2 days in it. It's today and tomorrow. This one's got 0 days in it. It expires today. This one expires today. It went from 72 to 42. See that? So that call option is holding its value while our premium on our sold puts is losing value very fast, or our sold calls. Pay $535 for this thing right now. Now I don't want to do it. Now I don't want to do it. It's fallen. This was a bullish trade, and it's going up. What are you going to do, Lan? What are you going to do? We could adjust it. Let's see if we adjust it. Let's bring this down here. Now we pay $1,000 for that. Bring this down in a couple of clicks. Back to 500. Back to 72. The market would still have to go up here. We're going to margin this at 772. That's our max loss. We're going to pay $577 for it. Our max profit is the difference between here and here. $737 is all we could make. We could lose 772. We're going to pay 577. So our profit on this max profit would be like $200. I don't like it very well. Do you? What do you think of that? What do you think of that setup, Michael Bruce? Matt, are you still here? What do you think of this option strategy? We don't like it, do we? Do we think the market's going to go anywhere at all today, or is it going to just end up in its exact same? You just stay right inside this channel. We think it's going to stay inside the channel. We could sell a call. We could sell a put right at the money. We'd collect $1,100 if it just stayed inside of that little. We could push it out a little bit out here. How much are you going to set? If you go one out to the boundaries, we'd receive $1,762. That's the wrong direction. That's not right. You got to go this way. Land. Put's got to be down on the bottom. Calls up on top. Now that's $702. So you're going to collect $702. Or you could bring this down here like this. Collect $972. Where are you getting those numbers? They're right here. Little calculator over here. See, 972. Right there. This is a 15-minute chart. So if the market just stays kind of neutral today and doesn't move much, just stays inside this channel, then the max, we'd make the most money if we'd put those right on top of each other, right there. Don't, just like that. See, we make $1,100. But you got to buy insurance. And the market, the max profit would be right there at that red line, right there. That's max profit. That would be max profit. Problem is, if it goes anywhere out in here, it's not max profit. $600. So we're going to go $600 this direction. $600 that direction. See, it's right there. If we go 480 that direction, 500, 480 right there. There's your profit window. Just like that. That's your max profit. Boom. We put on our wings out here because you don't want to have a $12,000 margin. So you got to buy a call up here as protection. And you got to buy a put down here as protection. Now our margin drops all the way down to $394. We scoot that in. And we scoot that in. So those are more expensive insurance policies. $220, $300. Now your max profit is $585 at that point. But it's still dropping. Now what is it? 600. $652. 602. Well, then you got to even decide to do it or not. You can't just sit here and stare at it. That's my max profit right there. It's adjusting, it's moving, it's shaking. Do I think this market's going to take off and leave this box? That's the question. Do I think we're going to have a big move today and go up either down, up, or down? If it does, then I don't want to do this. But if I think it's just going to hang out in here, come over and touch that purple line with inside those white lines, then this would be a good strategy. We'll make some money. Make a little money. That is called an iron butterfly. It's backing off again. $700. 647. Just to put. That's an iron condor right there, but it's a skinny one. We make more money if we bring that down. That's a 672. That's an iron butterfly. That's the difference between a condor and a butterfly. The difference is the condor has a gap between them. Butterfly that doesn't have a gap between them. That gap's so tiny, you might still call it a butterfly, though. Usually the butterfly, the condor, the gaps are way out here. All right. Okay, we just put on a condor butterfly. Now we just want it to stay neutral. We don't want the market to trend today. All right. So let's see how that turns out. We want to go back and trade the Russell again? No, it's dead. Good thing we turned that autopilot off. We'd just been getting our hiney handed to us worse than we are now. It's trying to go again, trying to run. It's trying to break up, trying to go. I don't want to see it get up above all these before we do anything, though. It's got to get up there and hold above all this stuff. Let's go over and look at the stock market. Let's go look at the stock market. Look at this. Look at that. Tesla. Tesla's the name of the game today. You guys all heard Tesla. Old Elon Musk got in there and gave his speech and got everybody all excited. Let's come and see what we got going here. This is our strategy that we played yesterday. Oh, that Microsoft. You know what? That really upsets me because we were up $750 on that yesterday and I didn't take it. It's down. It's $300 now. Down $300. Well, we can't take it off now. There's me and 23. We put that one on. We put that one on 268 days. Marathon. This is one we picked up yesterday. We got 23 days on it. And it's up $375. Soundhound. What did we do with Soundhound? How come we're in Soundhound? Oh, that's when we picked up 58 days on that rebound right there. It's up $30. It's a $4 stock. Vertex Energy. That's another one we put. Oh, we got 23 days on that one. Oh, it fell hard. $140 investment. This is the one we got going now, Apple. We put on Apple. We bought Apple yesterday. 6 contracts. One's at 149 days, one's at 23. We're up $427. We got 23 days left on the short and it rallied hard today. So that was a good move. You were smart, Lan. You were smart. Let's go see if we can do something else smart today. TSLA. 2 minutes, 5 minutes. I got into Tesla, so I'm doing good, making money. I took Tesla off, wrote it down. What happened? I got out of Tesla like right up in here. It's right back to where I got out. And it went all the way down. Now it's all the way back to where I got out. I got back in this morning, so I'm back in down here. So I saved myself a little bit, I guess. But that started kicking our butts, didn't it? Drive 1, drive 2, drive 3. Bottom of the drive 3. Just like a train on rails. I didn't know how long that drive 3 was going to go. But he got everybody excited. I don't know. I might do one of these things if it does go. He got everybody excited. I'm a little worried about Tesla because Elon Musk has been getting political. I mentioned that yesterday. I was a little nervous for Elon Musk. A little nervous for Tesla. So that's where we're at with Tesla. What do you want to do right now? Tesla 2-minute chart. You want to go play one on the short side just for today? It's kind of losing its mojo in here, isn't it? Where's Tesla's mojo? 1, 2, 3. Let's just price one out, should we? Let's just do a 2-day, just a day trade. It's $440 for one. If we think Tesla's going to close up higher than it is right now. $440. Still falling. We wait till we make the first candle to break a new high, then we'll add that in there. All right, let's go look at something else. Nothing else. Look, there is nothing with big circles. My goodness sakes. Holy cow, Michael Bruce, you were right. There is no volume in there. Boeing. It's the only one that looks like somebody might be playing with. BSX, but the volume circle is so tiny. Where is everybody? Let's look at NASDAQ. Nothing. AMD. AMD is trying to squirt back up a little bit. NVIDIA is coming back a little bit. MU, that's making a little ABC pattern. Apple, trying to squeeze up. Some of these stocks, we're going to look back at them and we're going to say in like 60 days, we're going to look back and say, why in the heck didn't I buy it when it was clear down there? There's Amazon. Meta. Whew. Meta's trying to squeeze up $496 stock, though. Warner Brothers. Siri. CSX. Walgreen Boots. Man alive. Texas Instruments. Look at that thing. Holy cow. That thing gapped like crazy. TXN. Wow, look at that thing. Shot right up and flushed back down. What would an option cost on this thing? 2 days, $273 for 2 days. If we think that's going to go back up. Did a nice rally and then it's flushed. It's hitting those blue lights, pulling back down. Tesla hasn't made its first candle to make a new high yet. Texas Instruments. Coming down to the 200 period moving average and riding right along it like a train on rails. Right there. He's going to come down and touch it again. Texas Instruments, you'd need to get up above here to even be serious anymore. I don't know, or at least above here. It's dying on the vine, Texas Instruments. What else? Apple, we already looked at. We can go look at Apple. We already looked at Apple once, didn't we? Do we want to add into Apple? No, look at Apple's dying. I thought we had, that's not Apple. There's Apple. Apple's coming into, there's A1 on our Apple. I got up this morning at 4:30 and came down and worked on Pit News Magazine. You guys have Pit News Magazine? You don't? How come? How come you don't have Pit News Magazine? You got to get it. It's really super cool. Where is it? Right here. I got to show you Pit News Magazine. It's a really awesome magazine. Pitnews.com, $1 for 3 months. Go try it out. You can listen to the articles. You can read the articles. You can watch the articles. We oftentimes put video inside the magazine. It's a digital multimedia magazine. You listen to it. You can read it. It's so awesome. Go over to pitnews.com. Sign up today. $1 for 3 months. And then if you don't like it, cancel. It's only $1. But if you love it, which you will, I know you will, it's going to be $49 for a whole year. Just $49 for a whole year. Can you believe that? It's all about the stuff we talk in these classes. So we're in the process of writing an article right now, not for this month. This month's just about ready to publish. But for next month, you're going to see an article in there about compound butterflies. And we're going to put in all the things we learned in here into the article. And then you have all that information available to you to read and look at. It's really cool stuff. All right, here's our 2 breaks right there. So there's A1, there's A2, and there's A3. So that's A3. That's A2. Now we're coming into, that's going to break those blue lights, and it's going to give us B1, right? B1. What are you talking about, Lan? I've never seen this stuff. What are you talking about? A1, A2, B3, B1, X1. I don't know what you're talking about. Where do I learn this stuff? In my book. What do you mean in your book? I have a book. Of course I have a book. Of course I have a book. It's called Stock Market Playbook of Strategies. You go get it on Amazon. Lan H. Turner. Just search Lan H. Turner. This is the manual to the class. Manual to the class. Look, I can show you some of the pages in here. What we do is we come in here and we have all kinds of really cool stuff. And if you look, see this right here, Elliott wave, Fibonacci theory, all this stuff. This is the count and measure. ABCD, Lan, ABCD, 2 ABCDs in a row makes an Elliott wave. How about that? And we count them and we measure them. And they're all about, it's all about the probabilities. So this is all a probability statement. So whenever you trade, you're just looking at probabilities. And then the higher we get up in the scale, the lower the probability the market's going to continue, right? So an A1 is a higher probability than an A2, and A2 is a higher probability than an A3. The problem is with A1s, we don't know when it's going to break out. Now, we have the morning bell, which we generally break out on the morning bell. And then we generally have a blue light system, right? That tells us that's our A1. When it breaks the blue lights, that's the A1. And then it comes up, this first little break right here, this is called a pennant formation, right? So a little pennant formation in here, and then another little pennant formation in there. And we generally get 2 of those in a row. This doesn't mean you can't get 3, 4, 5, 6, 7, 8, 9, 10 of them. Certainly can, but we don't generally. Generally, we get 3 of them. Just like this, we get 3 drives. So we call it the 3-drive pattern. This is drive 1, this is drive 2, and there's drive 3. All right. So once that is 3 drives, this is all one big drive. That's the A drive. Inside the A drive, we get 3 drives. Now we're getting this thing's coming back. It broke the blue lights. So now that means that when it crosses the next set of blue lights, always it's always the first of the new drives when it crosses the blue lights. Those blue lights will come in and intercept right down in here somewhere. And when that happens, that'll be our new B1. And then we'll anticipate a continuation of the uptrend. And we'll say that's an ABCD pattern overall on the longer term trend, right? We're only into this market 1 hour. And we got the first A drive. So if this market's going to have any strength to it, it'll go A, B, C, and then we'll look for the B drive to come up here. And then we could even look for it to do it one more time. Come up here, and then we get an A. This would be the B drive, and then we get the C drive. So you get A, B, C, 3-drive pattern on the small time frame. You then get drive 1, drive 2, drive 3 on the longer term time frame. And inside of each one of these next drives, so this will be the B drive, then that'll be the C drive. So this will be B1, then we'll get a B2 and a B3. And then we'd get this little pullback, break the blue lights. We get a C1, C2, C3, and then it'd be over. Then the probabilities are too low for us to trade anymore. Doesn't mean it can't go higher. It certainly can. It's just the probabilities are too low for us as small speculators to trade that anymore. So that's all we trade. All right. So that's kind of the little wave pattern that we look for throughout the day in the market. Now, does it always happen? No, it doesn't always happen, but it happens often enough that we can put our money on the table just like we would at blackjack. Do you win blackjack every single time that you play blackjack hand? No, but it happens often enough that you're willing to sit there and play the game. I don't like to equate this to gambling. I think it's more like a carnival game. It's not gambling, it's a carnival game. What's the difference between gambling and a carnival game, Land? Well, gambling, you're betting on an unsure outcome. It takes no skill. You're just throwing it out there. Now you can have some skill. I mean, obviously skill in anything can help, but you have more skill in trading and in a carnival game than you do in gambling. Gambling's a little bit less skill, a little bit more luck. Whereas in trading, a lot of skill, a lot more skill involved. And then, so when you go to the carnival game, well, it's a lot more skill. Throw those darts just right. You can pop those balloons real easily. You can shoot those little cork guns, or you can get the big panda. But if you're not good at shooting good little cork guns, you can't get the big panda. Well, it's the same. But if you get good at shooting cork guns, hey, you can get the big panda. It takes a little skill, a little practice. So that's what we're looking for here. All right, little skill, little practice. We're playing the carnival game. So that's kind of what we're looking for. This thing's starting to rally right now. We're going into the B drive. Now, it doesn't necessarily mean this is the B drive, right? This is just a little pullback. We need it to break those blue lights, and usually we get a little bit of a longer drive. But if it's strong, it'll come right up and break those blue lights real fast. So we're going to draw another line there. So we got our natural trend line, which is what we're seeing right here. This is called the spider web. The spider web, I heard you mention that once, Lan. Where can I learn more about the spider web? It's funny you ask. You can learn more about the spider web right here in my book. There's the spider web, all right, where we talk about the spider web. So this is the spider web. So what you got, if you have one natural trend line that's coming in here along the tops of those bars, and then the next one is the mathematical trend line. So where the blue light crosses over with those bars is the mathematical trend line. Now you can take the break of the natural trend line if you want to. That's your first entry right there. First candle to break a new high. That's it right there. Or you can wait, be a little bit more cautious, and wait for the intercept of the blue light. If you wait for the intercept of the blue light, then that's the B1. All right, so you can get in and you can preempt the B1 if you would like by getting in right now because it's breaking and it's trying to go up there, but it doesn't mean it's crossed and made that B1 yet because it could still come down here, right? It could go up, make a little ABC, and then come back down like that, and then turn and go up and break the blue lights way out here. So that's what you have to be cautious of, and that's why we have a spider web because you can either take, it's a decision you have to make. You are the trader. Are you going to have to take the first candle to break a new high right there? Or are you going to wait for it to cross the blue lights and then go up from the blue lights? And then, of course, we got one more across the high, the previous high, like that. And that's what makes it look like a spider web. So you got a little spider web in here in between the drives. This is drive 1. This would be the A drive. Then we got drive 2, which will be the B drive. And then we got drive 3, which will be the C drive. And in between the A drive and the B drive, you get a spider web. In between the B drive and the C drive, you get a spider web. All right. Now we got a spider web tool in here. I just drew the price. I just drew lines, but you got a little spider web tool in here. It's real cool. See, track and trade. Track and trade is an awesome little program. Has all these little tools built in for you. There's the spider web. There's line 1 right there. Go out here. This is going to be the natural. That's the natural trend line. Then we got the mathematical trend line. That's going to be the blue light. We'll just anticipate it'll be out here somewhere. And then we got the horizontal that's right there. And then to tie that off, you just right click, boom, and you got your 3 spider webs just like that. And that's why when you look right here, add to stage, it comes up there and see how it's labeled. 1, 2, 3. You can do 4 of them if you want to. So you get natural trend line. If you're doing the bulls and bears, you'll get a yellow bar. You can put the second one across the yellow bar. But oftentimes I just do 3. In this example, I've done 4. All right. So then we talk about the distances and what makes a good spider web, what makes a lousy spider web, what your probabilities are with the spider web. All right. So that's all good stuff right there. Good stuff, man. Good stuff. See how I've drawn them in there? Got your rally, got your spider web, got your rally, got your spider web. There's another example there. Got your rally, there's your spider web, got your rally, there's your spider web. Here's a downtrend. Downtrend, spider web, downtrend, spider web. See how I've got those drawn in there? And then we tell you the probabilities of those spider webs and where you're gauging your entries. All right. So each one is in there. It's all listed. Tells you how to look at the probabilities of these and gives you lots of nice examples. So that's in the book. It's just in the manual of the class. Go get the manual. All right. And then we talk about these things individually in Pit News Magazine. So the manual has all the stuff that we wrote, right? And then at some point you have to publish the manual. You have to stop writing in the manual. And then you still have more stuff you want to say. So that's what the magazine is. So the magazine is a continuation of what's not in the manual. And eventually we'll take the magazine, a year's worth of magazine, we'll take all the best articles out of it and we'll make a book out of it. And we'll have book 1 and we'll have book 2. Michael Bruce loves the manual. It's funny. The introduction is informative. I try to put humor in my work. I try to have a little humor here, not try to be quite so serious. Kirk says he loves Pit News Magazine. Pit News Magazine is great, isn't it? It's an awesome little magazine. Bruce says he loves Pit News Magazine. Everybody should have Pit News Magazine. Bruce, I was talking about you a little bit earlier. Don't know if you heard me talking about you. I told people you came over and traded with me yesterday. We had a good experience. This market's not giving us the rally we're looking for out of here, is it? We want a little stronger market to put something on. Come on, Apple. If you think Apple's going to go, you just go put it on right now if you wanted to. Let's come in here and look at Tesla one more time. We were waiting for it to break a new high. It's trying down in here. It's trying. Look at all that red volume. Look at that. Boy, those markets, I just went flat. It's trying. Is it bouncing? Is it going to bounce off that 28 period moving average right there and go? On the back side of the MACD. Tesla doesn't want to look like it wants to go. Texas Instruments was the other one. It died. Man, we got nothing today, guys. Everything. We got nothing. Look at how tiny the little Apple volume circle is. Usually that's a big circle. It's usually as big as Tesla every day. I think Michael Bruce had a premonition. He's like, it's going to be a slow day today. There's the Dow. Intel's got a big circle. Boeing's got a big circle. Who's this? Apple. Well, there's Apple's big circle, but that's against the Dow. It's got a big circle against the Dow, but against the S&P, it's a tiny circle. Microsoft's the one that we're losing money on because we had that butterfly on it, right? Nothing wants to play. You know, when the markets are going up and all the bubbles are percolating, you can just go pick any of them and make money. Makes it sound easy, doesn't it? You just go pick any of them and make money. It's never easy. It's just not as hard as it is today. It's just not always this hard. Oh, what's that one? Riley. It's got some big circles in here. That's a $4 stock down there. Sound Hound. What's that one? 63-cent stock, Nikola. That's a meme stock. We don't want to go play in that circle. There's Riot. That's a big player. That's a Bitcoin, right? Riot. Marathon. We talked about that one. I think don't we have something in Marathon? Oh, that's Marathon Digital. Mara. Let's go look at Mara. It's going the wrong way though. I thought we already had it up here. MERA. Yeah, we're already in Mara. I thought so. All right. Let's go look at Sound and Riley. SOUN. Sound Hound. SOUN. These are all small caps. Oh, we already have Sound Hound. We're in Sound Hound for 58 days. RILY. RILY. We got to get some trades on. We got to get some money in the markets. We're sitting on our hands. Let's go look at a 2-minute on that baby. Yeah. We've run our course on that one today. Drive 1, drive 2, drive 3 failed. Broke. X3's right there, and it's coming down, coming down. Not an exciting. Riley's run its course. Man, there's nothing. Let's look at the pump and dumps. Let's look at the pump and dumps. $0.34. $1.90. Branch out food. Can't put options on any of these. Just have to trade shares on them. What? Tesla? Oh, well, that's any. It's on the any market. $6 on, what's that? Direxel. Oh, Bull 1.5 shares Tesla. Oh, that's a Tesla. 1.5 shares. That's kind of a funny thing. I didn't even know that existed. TSLL. So if you want to compound your trades on Tesla, TSLL. So that's just Tesla times 2. Make twice as much money or lose twice as much money. Any options on it? Nothing to speak of. Look at the spreads on those things. Yeah, $2. That's not bad. $21. That's for a 2-day option. Well, Tesla's just kind of tanking, isn't it? It's made a little bow tie. Boom, 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 boom. Tie off the bow tie right there. Technically, I guess the next bow tie, you make another bow tie now. That would be your drive 1 right there. Drive 1, drive 2. It's just coming back too far. I think Michael Bruce had a premonition. He's like, there ain't no trading today. Everything's too damn quiet. AMST. AMST. We need to go clean out some dead wood out of our charts file. There's too many charts in here from dead things we don't trade. Well, that had a nice run for a few minutes. No options on it. You can't trade options on it. You just have to buy some shares. They're $3 a share. Apple. We're waiting for it to cross those blue lights. That would be the natural. That would be the mathematical trend line. So that first one failed. Didn't go up, break the blue lights. Coming back down. Still on the X1 on the downtrend. Well, guys, I don't have much else to share with you. That's about all there is. We can't get anything else in the market today. The ones that we do have in the market aren't doing us any good. There's that. We need that thing to fall. How many days have we got? 2 days left. We need this thing to come back down. Microsoft. We'll see if it does it. Just hang on to it. That's our 23andMe. We just bought that thing because it was a pump and dump, and we're like, let's just see what happens if we buy a 1 year on a pump and dump. Marathon. Oh my gosh, look at that thing. Holy smokeroonies. We got 23 days on that. That thing just dumped and tanked on us. Our max losses. Oh, we paid $2,400. Our max loss on that is ugly. I don't like that. Let's get rid of that thing. First loss is your best loss, your smallest loss. See ya. See ya, Marathon. Wouldn't want to be ya. This is Mags. Mags is turning around. Mags is the Magnificent Seven. This is like, it's 7 stocks. It's all your big favorites. Apple, Amazon, Netflix, Google. There's 3 more. You name them. Can't remember. Did we put it in the notes? No. Mags. It's trying to bounce. Oh, Tesla. Tesla and Tesla's in there. And so is Microsoft, and so is NVIDIA. What's NVIDIA doing? NVIDIA is trying to turn around too. What's Bitcoin doing today? Beto. It's getting ready to drop once more, isn't it? Look at that. It's going to come down, hit that 200 period moving average, and then it's going to go to the moon. Is that what you think it's going to do, Land? I don't know. It might come down and hit the 100 period moving average and go to the moon. Problem is they did a halving. Halvings, they usually, once they do a halving, they just did it like a couple days ago. A halving means they cut, it's like a split in stocks, right? Stocks trading at $100 a share, and they do a split. Now it's trading at $50 a share. So that's what they did. They did a halving. They call it a halving in Bitcoin. It's just they did a split. So they did a split, and usually what happens, the market goes to the moon. Now, it usually has a little pullback first, and historically speaking, and then takes off and goes to the moon. The problem is this halving caused it so that now Bitcoin, at the price that it's at the halving, costs less than it costs to make Bitcoins. And they make Bitcoins, right? They mine Bitcoins. And they're getting to the point where it's getting really expensive to mine Bitcoins. And that's the idea. When Bitcoin was young and little, it didn't cost anything to mine a Bitcoin. You could mine Bitcoins and get a whole bunch of Bitcoins. It's quite easy to get Bitcoins. And then as they got more expensive and they do more halvings and they got more expensive, Bitcoins get more and more expensive, and then it costs more money to make Bitcoins. And so the idea is that eventually they'll not be able to make any more Bitcoins. There'll be a limited number of Bitcoins, and that's why Bitcoin is what it is. It's like gold. It's a limited value. There's only so many. They can't make any more once they've made the maximum amount. There's only so many they can make. And then he's like, well, Bitcoin doesn't have any value because it's just digital currency. Well, fiat currency doesn't have any value either. They just print it. The only thing that gives fiat currency, the US dollar, value is how much are you willing to work. Your labor is what gives it value. How much are you willing to work for $1? How much are you willing to work for $20? If I give you $20, what are you willing to do for that $20? That's what gives it value. That's the only thing that gives money value, is what somebody's willing to do to exchange for it. It's the same with gold. Gold has no value. What are you going to do with it? Wear it around your neck? I mean, you can't eat it, right? So things that we give value only have value because you're willing to trade for it. We don't use gold in manufacturing anymore. It's too expensive. There's lots of other metals that are a lot better suited than gold. And so what are you going to do for it, right? It's like, what am I willing to do? We make it scarce, so we want some. Oh, it's pretty, it's shiny, and it's scarce. Oh, what are you willing to do for it? Well, we're willing to do a lot for gold. It's expensive for 1 little ounce. Well, what gives Bitcoin its value? Basically the same idea, right? Same idea. What are you willing to do for a piece of Bitcoin? But Bitcoin has intrinsic value as well, because it costs money to make Bitcoins. So what does it cost? Well, it's very expensive to make Bitcoins. Bitcoins are made through the process of computers processing, right? Electricity. So it's a stored value of electricity. That's really what Bitcoin is. It's a stored value of energy. So it take a big bunch of energy, and somebody had to pay for that energy through fiat currency, right? They bought it with fiat currency, and then they made it, and they cost them money, which you give fiat currency has value because of labor. So we know what the fiat currency is valued at. That is labor, and that labor is converted into energy, which is electricity, which then boop pops out like popcorn and makes a Bitcoin. So now you have a Bitcoin, and you're like, well, Bitcoin doesn't have any value. Yes, it does. It has value. It has value because it costs somebody something to make. If you paid for it, it has value. This spoon has value to me. Why does it have value? Because I paid for it, and I had to work. I had to go to work. I had to work. I had labor, and I bought this spoon. This spoon has value to me. Okay. It's a piece of aluminum. It's not got a lot of intrinsic value, but it's got value because I paid for it. So it's got value. Took energy to make it. There's a cost to it. You have to pay for it. Bitcoin's the exact same way. It's a store of energy. So one Bitcoin is a store of energy. And people don't want to sell it for less than what they paid for it. So they hang on to them. That's why they hang on to them. And that's why they want them. And they make more, but it costs them money to make more. So that's what a Bitcoin is. It's not just pulled out of thin air like fiat currency. Fiat currency is literally pulled out of thin air. They can print as many as they want, right? It's just boom, 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 boom. They print them. That's why we're $42 trillion in debt, right? Because they can just keep printing money and giving it away. They just give it away. They don't care. There's no value to it. It's just human labor. It's the economy of the U.S. economy that gives the U.S. fiat currency value. It's our labor. That's what it is. That's where it comes from. But Bitcoin actually has labor in the sense that it's got the labor cost, plus it's got the physical energy cost, a store of energy. So that's why Bitcoin's valuable. All right, guys, I've given my lecture, and there's nothing to trade. So we didn't do too well today. I guess we could pull up our spreadsheets. We don't have anything to enter. We didn't close out anything in the stock market. So we did. We closed out one. Mara. We closed that out, $350 loss. So let's put that on our spreadsheet. That was an option, right? Stock option minus $350. And then what did we lose in the futures market? $10? Or were we down $100? Oh, $10. So we did minus $10. And that was a lousy day. Another red day. Red day recap. Oops, that's the wrong one. This one, red day. So we had 2 red days in a row. Yesterday was a big red day, $500. Today's $360. So since we started keeping track, we missed all those days. I know. We're up $4,753. We've had 3 winners, 3 winning days, and we've had 2 losing days. So our batting average is 60%. Win-loss ratio was set at 2. Our averages were making $950 a day. So far, so good. All right. I guess that's it, guys. I do have a Sunday school lesson for you. Don't run off. Got a Sunday school lesson for you. Let's go look at the Sunday school lesson. I always like to have a Sunday school lesson. Look at that Russell. Man alive. Just choppy. We went out to longer term time frame. Maybe we could take some of that chop out, but it's just been choppy. It's a nice job, but it's just choppy. Hard to trade choppy markets. All right, here's our Sunday school lesson. How to determine which is the best stock to buy. Comparative strength price patterns. Compare the strength of an individual price chart to the overall broader market charts to determine which stocks are outperforming the index. So what you do is you put on like a 50-period moving average. You pull up your index that it's in. Let's say you're pulling up the index of the S&P 500. You put up the S&P 500 with the 50-period moving average, and then you want to compare that to a stock, let's say Apple. And so you bring up Apple, you put the 50-period moving average on it, and then you compare the two. You lay one over the top of the other, not over, but you put them on the screen, and you can see based on the 50-period moving average and the S&P 500 versus Apple, and you can see where it's at in relationship to that moving average, and it'll show you kind of visually whether the Apple is outperforming the index. And that's how you do it. You compare, and you can see which ones are outperforming the index and which ones aren't. And then, of course, you want to be the buyers of the ones that are outperforming the index. So that's kind of our Sunday school lesson. All right. All right, guys, that's it. I'm going to let you go for the day. I might not be here tomorrow morning. Check and see. I've got a funeral that I'm going to probably be at, so I may not be here in the morning. If I go to the viewing tonight instead of the funeral tomorrow, then I'll be here tomorrow. I have not made that decision yet. So we may catch you tomorrow. We may not. Check in with me and we'll see. And otherwise, I may see you on, what's today? Today's Thursday, isn't it? Oh, today's Wednesday. So that would be Thursday. All right. So may see you on Friday. Either way, catch you later. Take care.